couldn't attend, it's going to be recorded, and so you'll be able to listen to this again if you wish, or know someone else who's interested, they can listen to it. And first of all, I'd like to introduce myself. My name is Jody Tiernan from Tiernan Associates. We're here in Union, Ohio. Our niche in this world is cash preparation for small business, self-employed people, small corporations, things of that nature. This is our first time that we've ever done a webinar before, what I like to refer to as a tax chat. So please either email me or call me if you have any questions, if sound is not good or video or whatever the issue is. So if you would just be patient. If for whatever reason it doesn't come across very well, and if you have any questions, again, don't hesitate to call or email me, because that's pretty much what we're here for. So like I mentioned, this is our first time. It is being recorded, and hopefully this works out pretty well, because if it does, I have every intention of going through with this multiple occasions on multiple different topics. So again, if there's anything that I can help you with, any questions that you may have during the webinar, please feel free to use the chat box to your bottom left of your screen, and we'll try to answer that as soon as I can. If not during the webinar, then either today or at the latest tomorrow. So we're basically here today to talk about incorporating, a subject that I've been questioned about quite a bit lately. And it's something that for most of folks, there's a lot of questions about incorporating. There's a lot of misnomers. There's a lot of questions about it. First, we got to determine what is a corporation. A corporation is a separate entity unto itself. You could have your personal stuff, you've got your personal car, personal furnishings, personal accounts, and then you've got your corporate income, corporate bank accounts, corporate furnishings, business, buildings, things of that nature. So they're completely two different entities. And we've got to make sure that we understand the personal is definitely not the corporate, is not the business. That's very important. So basically what we're going to start off with, that is a corporation. Separate entity, nothing to do with personal, clear distinction between the two. So basically what we're going to start with is the advantages of being incorporated. Hopefully you can see that there's a screen there. Should I be incorporated? Now, there are two major advantages of being incorporated. For most people in this country, if you have a large enough business, then the liability aspect is a huge problem for most businesses. And that's the first advantage of being incorporated. What is the liability? If you have a business that comes in direct contact with an individual or with an individual's assets, then there may be quite a bit of liability involved. As an example, restaurants. Restaurants, people consume food. You go to their place of business, you could slip, fall. All sorts of things can happen with the restaurant. Your liability goes up dramatically because of that. So if you feed people in any degree, incorporating is definitely an option. The other examples, if you're in landscaping and you happen to go to someone's home and you rely on the individual to mow your grass, do whatever it may be, they could damage that property. Not only along with themselves and their property, they could damage your property. So in both cases, you're talking about individual people or individuals' assets that you could damage. Now, with a landscaper, if there's enough in the way of income, then there may be a need to have incorporating. But if there isn't enough in the way of income to justify all the things that go with incorporating, then you may just simply want a limited liability company. A limited liability company. What is that? That is basically formal documentation with whatever state that you reside, whether it be Virginia or Texas or Utah. You would file that with the Secretary of State, and that is just simply a limited liability company, an LLC. It's not a separate entity for tax purposes, but it is a separate entity for liability purposes. When it comes to liability, most businesses have some type of insurance. That's your first corporate veil is what they refer to it as. Your second level would be then an LLC. Again, filing incorporating LLC paperwork with the Secretary of State of whatever state that you live in. So you've got insurance, you've got LLC, and then if you determine to be incorporated, then that is a third layer of protection. Now, back to the landscaper, maybe they don't need to incorporate. They don't want to go through the hoops to become incorporated and deal with everything you need to deal with to incorporate. So they'll just simply have insurance, they'll be bonded as an example, and they'll have an LLC, which should be good enough for most landscapers. But back to the restaurant, there's just too much liability for that. There's too great a possibility of someone being injured. So with the restaurant, definitely incorporation needs. You really should have those three layers, the insurance, the LLC, and incorporating. Now, for a lot of my clients, what they do is they sell a product, and they're a distributor of that product. They didn't create the product or service, but they just simply sell it. Now, in this case, whether it's a vitamin or some type of drink or a cosmetic, something of that nature, and if you provide that to your customer, and maybe the vitamin, in some fashion, they became ill, the cosmetic, they reacted to their skin, well, the chances are, as a distributor, you are not going to be sued, but the company in which you work with will probably be sued. So in that case, even though you do come into personal contact with dietary needs or something of that nature, and that person falls ill, again, they're not going after the distributor, they're going after that company that actually created that product. So with the liability aspect, it's huge. But the one important thing with that is, for example, with the landscaper, do you have enough income to justify it? That's the question. And then we can always help you determine what is enough income. It's based on a per taxpayer basis, based on a per business basis. So I can't exactly say if you have this amount in income that it will be enough or it won't be enough. It's based on per person, per business. So that's the first advantage of being incorporated. The second one, as you can see there, is the tax savings. And that's the question that I get most of all. I have heard from this person, or my uncle is incorporated and he says you can save money. Some way, somehow, a lot of people believe that if you incorporate, it's automatic. You will save tax money. And it is a possibility. How is this? And I'll try to explain it as well as I can. Is that if you have a business, and let's say, for example, you take your income, you subtract out all of your expenses, you end up with a $100,000 net gain. Just make it round numbers. Of the $100,000 net amount, if you pay yourself, if the business pays yourself, for example, $60,000 of it, on a W-2, and with that W-2 they're going to take out for Social Security and Medicare taxes, then the remaining $40,000, the $100,000 net income, the $60,000 you now have as Social Security, as W-2 income, the remaining $40,000 then is subject to just regular income tax. That $40,000 is then not subject to Social Security tax or Medicare tax. So the difference in tax savings is that $40,000 not subject to Social Security or Medicare tax. That's where the tax savings are. So again, back for a moment. If you have a business, you take your income and subtract all of your expenses, you end up with, and I'm making this number up, $100,000. Of that $100,000, you pay yourself through a W-2, $60,000 of it, and now that $60,000 has already had Social Security and Medicare taxes taken out. That $60,000 that you've got as W-2 is now taxed at regular income tax, but the remaining $40,000 is still taxed at the regular income tax rate, whatever yours might be, but it's not subject to the Social Security or the Medicare tax. And that is, again, that's what you're saving. So can you save taxes? So can you save Social Security and Medicare taxes by incorporating? Absolutely. But again, back to where I mentioned the liability issue is, if you have enough income to justify it. That's the thing. If you've got enough income to justify it. So those are the two major advantages of being incorporated. Now, there's so many other advantages, but for the majority of my clients, those are the two key advantages that most of my clients will want to know. Those are the advantages of being incorporated. Liability, tax savings. Now, as for the disadvantages, this is where, in my opinion, a lot of the information is not conveyed, or it's not conveyed correctly. You got to make sure that you got the good stuff, you got the liability, you got the tax savings, but it's important to know that there are hoops that you need to jump through. The first one is costs. With the costs, first thing is you have to set up paperwork. Now, we can set up the paperwork for you, but a lot of people set up the paperwork themselves, or they go an attorney to set up the paperwork. Now, what is the paperwork? The paperwork is basically where you go to the federal government, you ask to be incorporated. You go to whatever state you reside, you go to the state, and file incorporating papers there. And then, like I mentioned, by you becoming a W-2 employee, then there's more paperwork there, and I'll explain that in a moment. But when you incorporate, like I mentioned in the letter, it just depends on who is going to charge what. I suggest at least $250 to $1,000. Again, depending upon where you live, I don't know, but it's something you need to be aware of. Now, if you do it yourself, that's fine, but there's still going to be a cost associated with that as well. So that's the first cost that you're going to have. The second cost of it is that, again, with payroll, you have to realize that there's going to be costs associated with that. Now, again, you can do it, or you can have it done. It's whatever you wish. But, again, you need to be aware that from the point that you create the corporation to the point that the corporation ceases, there needs to be some type of payroll done throughout that entire period. And then, depending upon if you do it, if Tiernan Associates does it, or whomever, be aware that there are going to be costs just with filing the paperwork, or with transmitting the information to the state, federal, local governments. All of that needs to be processed. The third item, when it comes to cost, is the actual preparation of the return itself. For Tiernan Associates, it's $250. That's the starting cost to file the corporate return. That's just the starting cost. Now, I find that we're very economical, but again, if there's more work, the cost might go up. If you seek out other professionals to file the corporate return, it will probably even be more. So it's important that you're aware that there's not there. You have the inception, payroll, and now the actual filing of the actual federal, state, and if you have local returns. So you got to consider all that. And then the fourth item that you want to make sure that you understand is that the cost of that when you cease the business, when there's no longer any business, then there's also paperwork for filing with the federal, state, local governments, all this stuff. It basically tells them we're no longer in business. Now, what will that cost? I don't know. I'm really not sure whatsoever. It depends on how much paperwork there is. But you should be aware of that. That all could cost. So those are all different pieces that you need to consider when it comes to cost. The second item there, and with being incorporated, like I mentioned earlier, you've got the personal, and then you have the business. What I have found a lot of folks don't understand is that when you've got a business, that they want to take that business income and pay their home mortgage. They want to pay for their insurance. They want to pay for their personal car. And that is not correct. You cannot do that. What happens is when the business receives income, you are then to receive that income in the form of a W-2 or in the form of a distribution directly from the corporation. But you just simply can't take a business check and write it to yourself and sign, or write it to your mortgage company, or write it to whatever company holds your car loan, for example. What happens is the money the business receives has got to be filtered through the business, and then it's got to be distributed to you typically through a W-2. But you just can't take business income and put it with personal income. You have all of your personal, you got your savings accounts, your personal checking accounts, personal retirement accounts, wonderful. But then here, you've got your business checking account, business maybe savings account, business credit cards, and if you own a building, then you've got where your building is now owned by the corporation. Your vehicle is owned by the corporation. So there's a very distinct line. This is business and this is personal. You cannot refer to as commingle where you take business income and just directly pay for personal expenses. That's not possible. If that happens, if the IRS ever questions your corporation, they may determine that you no longer have a corporation, that the corporate structure is non-existent, and they may completely do away with your corporation. So it's very important that you make sure that here's business income, and it's filtered to me in the form of a W-2, and then you pay personal expenses with that. That's the second disadvantage of being incorporated. The third, and I've already made mention of this a little bit, is the amount of paperwork that's involved. And it's not only so much that there's just more paperwork. And I've already explained to you, you got to file just to incorporate, you got to file the corporate returns, you got to file payroll returns, you got to file if you ever close business, all that stuff. But the thing is, it's imperative that all of this is accounted for on a timely basis. Very important. March 15th is when corporate returns are due. If for whatever reason you don't file it by that date, and you don't file an extension, or if you file the return beyond the extension date, it will cost you thousands of dollars in penalties. So it's important that if you do the incorporating, that not only is the corporate return, the corporate state return, filed on time. But you also have to account for all of the payroll forms that have to be filed on time. That's very important. If you don't, the interest and the penalties are rather extreme, very extreme actually. Then the fourth item, fourth disadvantage, and I mentioned it multiple times, is payroll. You just got to make sure that you pay yourself. This past year, I dealt with a client who had a corporation, and her accountant never mentioned anything about having a W-2 for her. There was a corporation, and the way that it was set up, the net income flowed to the personal return, but there was no W-2. There was no Social Security, there was no Medicare taxes taken out of that. And as a result of that, if the IRS were to ever question that, in which they should, they would have a major problem with that. The part of your income from a corporation, and I'm specifically talking S-Corp, it's got to be, it has to be some type of Social Security or Medicare wage taken out of that. So payroll is a big deal. You just got to do it. That's the bottom line. That's the bottom line. So what I'm going to do for just one moment, I'll see if I can't read over. So I've got a couple questions here. So just one moment, please. I have got one question. Actually, I have a couple questions. The one question was, back to my example, is that if the business has a net income of $100,000, if we can remember that example, and 60 of that thousand was W-2, he asks, the question I have is, the other 40,000, is that subject to Social Security and Medicare? No, it is not. It is not subject to Social Security or Medicare taxes. It's subject to regular income tax, but not Social Security or Medicare tax. And then he asks, is it taxed as personal income? That's the only place it is accounted for as personal income. It's the only place. So that $40,000, not subject to Social Security or Medicare, and it's just strictly taxed as part of your regular income. And then I've got a question. As a business owner of selling products, income is subject to Social Security. If you are self-employed, just a moment, folks. As a business owner of selling products, income is subject to Social Security. As a business owner, if you are a sole proprietor, and your income is greater than your expenses by more than $400, then yes, then that income is subject to Social Security taxes. Yes, it is. Basically, the end result is this. Should you be incorporated? Don't know. But these are just a few, again, just a few of the advantages and disadvantages of being incorporated. Things that you need to know as a business owner. Maybe you like the tax savings, but at the same time, you don't want to deal with the paperwork. Check with us. If this is something that you're seriously considering, contact us. We'll specifically look at your information. If we are already doing your return, we'll look at your numbers from 2011, 2010, and we'll see if there are real advantages of doing this. If there are, we will tell you those advantages, and at the same time, we will also make clear of the disadvantages of doing this as well. If you're not a client of ours, just simply send us if you are self-employed, send us a copy of your tax return for 2011, 2010, and we'll evaluate whether it's better to do incorporating. Maybe specifically for you it is, but maybe for someone, maybe it will not be. So we would have to evaluate on a per-case basis, and I'm not going to charge you for that. We'll look at it. If it is, if we think that it might be your advantage, then we'll do that. If not, then we'll tell you that as well. We've been doing tax returns for 30 years. I know that we're exceptionally confident with this. We can help you. But at the same time, I know I'm not going to take advantage of this because I think that a lot of other accountants might want to be your friend in incorporating. I'm not suggesting to do it or not to do it, but we're going to look at it from outside the box and say, this is good, this is bad, what's best for you? That's what Tiernan Associates is going to do for you. So I've only got a few moments left. If you have any other questions, and I have not addressed them, I apologize, but feel free to email me, and I will get to you. I can imagine today, if I didn't get to your question, you can either email me or call me. I'll be more than happy to take care of that. Not a problem. I appreciate your attending today. I hope it was worth your time and effort. And like I mentioned at the beginning, I really do hope this is successful with the tax chats. I really plan on doing this more often. I plan on the next one or two I talk about with people who are business owners who employ people. Should they hire on a 1099? Should they hire people on a 1099 as a subcontractor? Or should they be an employee? This is a question that I get very often, and it's very important that people understand the fine points of subcontracting and being an employee. So this is something that I'll address again, but if you have topics that you believe that you would want to know about or other people would want to know, please don't hesitate to, again, leave it with the chat box or simply email me or call me. Again, I appreciate your time, and thank you very much, folks.